for now at least is seeing some sanity. But what about the overall markets? What is it they should be doing? Let's welcome on board Samir Arora, founder at Helios Capital, to talk about his views on the markets right now. Samir, hi, good morning. Good to be speaking with you. Wish you a very happy Chinese New Year first. How are you celebrating your vacation, if at all you're on one?
No, we had 2 days holiday in the sense that the office is closed. Okay. But that doesn't mean that from home we were not on that all the time on Bloomberg. But Happy New Year, and we hope that the year of the horse is good for India also.
Yeah, the fire horse. I'm wondering whether it's only the Chinese equity markets which will be on fire and galloping, because that will definitely have a India repercussion as well. What do you think India is going to do in the balance of the year?
No, I think India will do well. Basically, what has happened is that these Asian markets, particularly Korea, Taiwan, have gone up too much, too fast on the back of very aggressive new earnings estimates for all these Samsung and Hynix and all these memory chip companies, with maybe profits up 5 times, 3 times from a year or 2 years ago. And that's why the money is chasing that. But in general, we know that these things are commodity related more than AI related. That is at least chip prices and memory chip prices, not the NVIDIA type chips. And therefore, it looks a bit too much. But separately, India is not doing badly recently. Even when there is selling in IT, the aggregate numbers for FIs are not negative and the index itself is not falling. Maybe there is internal rotation or whatever. But and the currency is also broadly within range for the last 5-10 days since the US tariff deal was announced. So it looks much better now. And the earnings estimate for next year, all these brokers are putting out 15% type numbers, which would be perfectly acceptable for any investor.
Samir, how do you look at the IT companies? In the last 15 days, we saw over 10,000 crores of selling happening in the IT sector from the FIs. How do you see this sector now?
I think that these guys were very late. We have been negative for a year. Everybody could see that the sector is disrupted. And I was just listening to a guy saying that it has been up one day, down one day. Not at all. It's been down 15% this month alone. But there is no reason to step up right now, because what is the need when we don't know exactly what is happening, and the earnings estimates or projections as put out by the companies themselves, guidance, etc., will be 3, 4, 5%. And nobody's saying that the 3 can become 10. So there's no need. When it is announced, in those days the stocks are up 4%, 3%, we'll see, or when time passes. There is no need to think that we or anybody's understood, what the repercussions will be. But it can't be positive repercussion. It may be that they are okay, maybe they are needed for the transition. But to say today that 18, 19p is okay when below average valuations could be 14 also. People say, oh, this has become 5-year average and 7-year average. But if 7-year average is the valuation, then there were times when it was below average. You cannot have that stocks only trade at average or above average. It is just not mathematically possible. Maybe this is the time when they should trade below average. Who knows?
So, Samir, so what specific fundamental shift would one have to hear from Indian IT sector per se to get the conviction back? Or do you think now it's only about a valuation game? Once the valuation reaches same level, do you buy up?
They have to guide 10%. You can't say that I will be okay. Guide. One day you'll have to guide maybe for the quarter, for the year. Right now, if you say that I have 5% AI revenue, but I don't know how much I lose on the legacy. Remember about 3 years, or maybe it was longer. It was after COVID, when everybody started looking at IT companies to say how much they have of social and whatever that word they made, I think smack, whatever they made, social, mobile, something. And every company would say we are reaching 10% in that and 20% in that. And there were these pure IT guys who said we are only in that. One of them was this very happy company, and they said we are only in this. And then what happened? Because it was simultaneously, even though that part was growing and we were all tracking that this is now 20% of revenue and 15% of revenue, but the rest of the business was growing at negative. So the end result was what you saw for 4 or 5 years, where these big IT companies are at zero. So now people say because these are big companies and because they have not gone up for 3 4 years, therefore they have to go up now because that is the reversal to mean or something. I mean, how many companies do you want to know about in the world or in India where companies have done very well? They are still big, but nobody cares. There are many companies like that in the world. It's not that every company which was good and even now is doing okay. It's not that it's not doing bad, but that every morning you will discuss it. You don't discuss every morning, which maybe you used to do 10, 15 years ago. What has happened to Grasim? What has happened to this company? What has happened to Lever? Nobody discusses. They go on, people buy them, but nobody is interested. It can be like that. Cisco was the world's best company and the largest market cap in 2000. Now, every day, do you think CNBC Squawk Box in the morning says what is Cisco, what is doing? Although Cisco has done well, it has recovered, it has maybe gone back to its all-time high, but every morning they don't discuss it. So
I
that is
get
how it
it.
can be. They are okay, but they are not worthy today of thinking that they have to go back and gain their absolute prominence because they had it once. Life has changed after 10, 20 years. New things happen.
No, I completely get that. And you know, Samir, you, for one, have been always propagating the elimination strategy that sometimes avoiding makes you more money than actually predicting the top winners. So I'm trying to understand, I mean, how do you maneuver your portfolio in the year ahead? What do you buy? What do you avoid?
So right now we avoid IT. So, I have this book which I keep talking about, and you should read. It's a very good book called Engines That Move Markets. It's a really good book. Each chapter is on a technology, and starting from steamship and then railways and telecom and internet and God knows mobile and everything. And in every chapter, the end result of that chapter is that you could not have known the winners easily, and mostly never, but you could have identified the losers, whether it was sectors or companies. It basically means sector because those companies were representing those sectors. So even in AI, even today, do we really know that whether Chat GPT in the end will do well or not, or Anthropics in the end will do well? Today, Anthropics looks a little ahead of Chat GPT, although its market cap is half or whatever. But do you really know what Grok will do, what that other fellow will do? We know that that Perplexity already seems to have disappeared from the face of this earth. We don't know who are the winners, but you have seen the number of losers across the world. It's the same thing. Do not go where you could be a potential loser for now, unless it becomes really cheap or something. So basically, we know that broadly the financials will be okay, but who knows in the end? And consumer, some parts will be okay, and then you do hospitals and hotels and all these things will be okay. And anyway, these were the sectors that otherwise are also relatively doing okay in India and should continue to do well. And you avoid anything to do with this coming in the way.
Samir, you spoke about the fact that IT was the underperformer for you, and you've been not looking at it for last 1 year. But if I were to ask you the entire AI narrative which is going around, which are the sectors do you think can benefit and can create value for investors? Maybe not in short term, but over a period of time.
So I just told you that it is not easy to find. So why will I find? I just told you that book has maybe 40 chapters on 40 technologies, and the conclusion of each chapter is that you cannot find. Once in a while, you may think you found and it may work and you think you are, but broadly you cannot. And that is the whole point. That is why, although we didn't aim it like that, but that is how it works with the elimination. Don't try and find winners. Don't try and find that because now India has allowed, say, data center investments and encourage it through tax cuts. Now, who will put that data center? First of all, we don't know who should put up that data center. Is it the real estate guys? Should it be an L&T type? Should it be a TCS type? Who is to put it up? And or maybe the India will do well because these hyperscalers and Google and Microsoft and even Nvidia will put and that will be great for India. And some new companies will come up which are maybe today unlisted. How do we know? We don't know, because we can see in US that all the guys who are making those big investments are also not going up. It may be surprising for people to know that Amazon is down for 1 year, Microsoft is down for 1 year, Meta is down for 1 year, only Google is up. And similarly, all the guys who are making the investments, like Oracle and all these other guys, are all down and much more. In the middle of that, when we are for now fringe players in this, for us to say we will buy somebody because he has announced that he will do a data center which we know is beyond his capacity in terms of size and amount of money, and we know he doesn't have the chips, so he will set up a real estate and set up some racks. Why? Let it come. But in the meantime, avoid obvious losers. And how do we know them? Because if you can see what is happening in the rest of the world where this is more live, we can say, okay, maybe that will hit us one day. There is no need to be bold in today trying to find great winners. Avoid the losers. That is all.
Samir, okay, point really taken. Now, let me talk about two spaces which we don't talk to you very often about. Out of your basket of stocks, I know financials is something we talk about regularly, and consumer services is something we talk, especially platform companies, is something we talk about regularly. But your portfolio comprises around 16% odd of capital goods, oil, gas, and consumable fuels. Talk to us about what you're seeing there, because that's a very fascinating theme or themes which currently the market seem to be ignoring, or there's been some underperformance, especially where cap goods is concerned.
No, cap goods actually, like if you say L&T types, I don't know what all you include in it. That is more a big picture play on the fact that we don't know exactly now which part the investments will go, and plus these guys have good orders from Middle East and all that. So broadly, it is a all-in-one shop. So even if, for example, they announced yesterday this deal with a deal means something with Nvidia to make data centers. So we don't have to separately figure out, and they are also in defense, and therefore it's sort of a one-stop shop to cover many angles. The other one is that in big picture sense, we know that there will be investments in AI. It's just that we don't know who the winners are, but you broadly know that power is a worldwide issue, and that these guys like what's his name, Hitachi, and all these guys will be all involved, or Cummins will be involved, and all these guys will in some form or the other. It's not that nobody will make investments. It's just that we don't want to rely on pure plays in that sense. But if somebody is doing 10 things and his 11th thing is to be a play on this, and therefore that gives him 2% extra growth over and above what he's growing, that's a good simple way of being involved in that sense, because these themes are there. It's just, as I said, pure stocks to find in these themes are not easy, and mostly maybe if they are, they will maybe in unlisted space and not yet public. But broadly, the idea is that once you say that you are big picture positive on India, but you don't like IT, which is our case, and the financials have, there's a limit, and we also don't like one more thing within financials broadly, which is capital markets related, other than this MCX. We don't like brokers, and we don't like stock exchanges, broadly speaking, because of this continuous pressure that too much volume, too much speculation has gone on in India, and the government and the regulators seem to have noticed it and are trying to curtail it. We think those stocks will not be there. Will not be in our list. So you broadly find from other sectors.
So, what's up with Eternal? And is that a Dipinder Goyal stepping down from his previous position, Jhatka, or is there something more to it? And do you buy or add up at 270?
Eternal is very good. They are too brilliant. They are more brilliant than we can imagine. Just imagine that if Eternal's price is what it is, do you think that Zepto can go public? Just tell me big picture. Do you think it can even go public? Because what will they come and say? That we are better on what ground, and why we deserve now a listing at some obscene valuation, when the number one guy, and these guys are smart, suddenly they will start guiding, this year doesn't look good. As soon as they see another guy trying to raise money, they start bringing down the high whatever estimates. We think they are too brilliant. They are outside this group in terms of how that company is managed. We are totally impressed with it.
How else do you play consumers, Samir? Of course, platform company is very clearly a big bet for you, and you seem very, very bullish with regard to Eternal's
But just to
prospects.
say, when we say it's not a big bet because the weightage will be 4%. Our point is we don't have 8% and 9% of any company. So therefore, when we say we are, we have a high weight, that is because we think 3.5% is a high weight in our life. And that is how we are able to handle all these companies. Just to tell you big picture, the Helios Flexi Cap is up nearly 20% in 1 year. And some of the bigger flexi caps are up 6 and 8%, and some of these more respected funds are up 6%. So it is without any concentration, without any relying on one stock. And even if you count all our platform type companies in which you count Paytm and this and that, then also together it might be only 12, 15, 13, 14%, or even less maybe. There is no one stock that will define our performance beyond a point. But we, like all my life, I used to talk about HDFC Bank. Now I deliberately and actually talk about Eternal, but it is not going to change my life beyond a point, other than to give me satisfaction if it does well. It's like that.
What about SBI?
Sorry?
What about SBI, Samir?
SBI also we're good because we don't have other PSU banks, and SBI we own at least in our the mutual fund is new, but we own it in our funds otherwise since June of 2020 when the price was about 180, and since then we've continuously held it and we continue to like it. And the amazing thing is that despite having many 2 or 3 changes of CEOs and in PSUs, you're always worried who will be the new CEO. Each CEO has been more outstanding than the previous one. It is amazing how a state-owned company where normal association is that these guys have come from internal, but who knows on merit, this, that, but all of them have been very good, and its numbers are as good as any private or even better.
PSU banks should now be given a little higher valuation given the fact that the government's focus is to get the best guys on top, professional management in some cases, and as you yourself said, in SBI's case, every top management has been better than the other. Do you think that valuation gap between private and public sector banks should now narrow?
It has been narrowing. It's just that because we are from the old group of owning the whole HDFC and ICICI. ICICI, by the way, we own continuously since 2018. Within a few months of Mr. Bakshi becoming CEO, I think he became in 18 and we bought it in 18. I mean, obviously, previously also we used to own it at various times, but this new round we own from 18. So we have been lazy in changing any of those. And so therefore we have, you can say, focused on a State Bank as saying our one-stop PSU exposure, and otherwise we own Kotak and Kotak and HDFC and ICICI.
And your take on defense companies, HAL, BDL, BEL?
So across all our funds, we broadly own Bharat Electronics, and we don't own, because we as a, for 20 years, we don't like these big, long 15-year type orders that you are making some submarine or you're making some planes, because we think these things try our patience too much. And 15-year orders and 10-year orders where it takes 3 years to get a design approved and 2 years to then get the first this thing. We like these electronic type things. You need it all the time. You need it in every project. You can export it and you can have smaller, more ongoing orders without, as I said, we don't like anything to be one off, one line that I have to see in the budget, whether this program is being funded, not funded, delayed, or some engine is not coming or something is not happening, or one plane had an accident, so we don't know what happens next. These are not our style of things.
Okay, Samir, great to have you on the show as always. It was lovely chatting with you.
Thank you very much.
Okay, let's take a very quick break. We're doing okay. BDL, CG Power, Cummins, Colgate. Interesting mix of winners out there, as was the case yesterday. Just want to refresh my screen and see what else has been doing well today. While the index is flat, MCX